Hey guys, hope everybody had a great weekend. It's blizzarding here in Chicago. President's Day, kind of quiet. Didn't do much as far as markets just because everything's closed, but wanted to hit on crypto. Obviously, it's been the most explosive and the number one spot to be as far as asset classes. And I think BTC's by far the best performing security asset on the planet. So we'll look at the cycles there. Some of you were trading it this weekend. And then I'll hit on just briefly, just big picture global macro heading into tomorrow. So let's just start with the cycles. Okay, good. This is a monthly chart. So this is futures. Kind of what I would trade mostly and do a lot of our signals off of. Just because I'm more of a futures traditional institutional background, but this is just one of the charts I have saved. So it's kind of our setup. It has some of the other cycles we can get into on the like 4 hour and daily chart. But I like to look at this 8.6 cycle. Those of you that have followed me a while, I get into that in our directional model and the cyclical stuff that we do because it's a derivative of a pi, 8.6, pi being the perfect cycle. And so you get into these Fibonacci's numbers, it's all the same fractal nature of how the world's designed or the sacred geometry. And so when we look at that in math, 9 counts, 8 counts, the TD sequential, a lot of institutional traders use Tom DeMark stuff. His is more math oriented, but quantitative stuff will come out to very similar setups. But I like to follow an 8 to 9 count. Whether you want to look at a monthly, weekly, daily chart, sometimes you roll into a 13, 21 count. And it's a little bit subjective and relative, but it's good to keep an eye on these waves and these cycles. So I could draw it out a sine wave along the lines here too to be a better visual, but just for the sake of time, I just counted it out lately. So the market peaks in 2017, right? The futures actually launched the same month that Bitcoin put in its high on the last bull run, and then we went on a pretty classical 8-month down move, and we bottomed out 13 months from the high. So very cyclical. You start the new count up here and pretty much a half a cycle into new highs, which was bullish. And then if you count another 1.8 cycle, basically took you into 2020, and this was a basing period after the initial move off the low after the 13-month low. And then we broke out on the 13-month cycle as well. So that's very bullish for this new upturn. When you break out after a long-term cycle like that, very bullish. So on here, I'm also showing a 13-week high that we currently put in last week. Doesn't mean that we can't keep going, but I'm just, it is what it is. That's the timing of it. So that's the monthly view. We go down to the weekly level. Excuse me. One sec. Let me switch the count. So this was kind of, I'll break it out into 3 different years. So here's the down move, nice ebb and flow. You guys follow me a while, you start to see this, right? New cycle, boom, down, make a low, 8 in 4 weeks off the low. You had a midpoint of the 8.6 week rally, fail, make a lower high, another 8 weeks into a low. Basically same counter trend bounce, 4 weeks up, boom, another pivot low. All right, so there's this back and forth going on. I've been tracking these type of movement in YouTube videos. We go back. I've been drawing this by hand for so long, and then on the other Coinage charts, etc. All right, but this was a low here, 8 weeks, and then here's again. This is a 13-month low, but failed to make a lower low on the 8.6 count here to start the year. And then as we started to make new highs, it becomes a new bullish setup. So this is really interesting. This is why I pay attention to the timing and this count, because it just helps you with your profit take, kind of gives you just a feel for how long you are maybe in the tooth of a rally, especially when things go vertical like they are now. But so here's the low, very quiet price action inside the base for this count, and then boom, we get the breakout real money candle here. And classic 8-9 weeks into a high, sideways, boom. This was the intraday high, and then we had another peak here, 8 weeks. Start another digestion period, finish the low down here with the cycle. Both of these pivots produce lower highs. So very cyclical. This is just the rhythm of markets, but really it's the rhythm of everything. 8 weeks up into a high. This was a very tricky drop because it looked like we dropped from a high to a new low, and there was a potential to come back to this area. But the fact that we didn't produce any follow through and then didn't produce a new low at the next cycle, that was constructive. And then we resumed the uptrend. So I'm trying to bring you back in here. So before the breakthrough 10,000 and 15,000, we basically rally back to the highs from the early part of the year. Can't break out, have to wait for another full 8.6 cycle before we finally basically made a new high. And then we had to wait another full cycle before you clearly were through this pivot high. So it was kind of like, this was the really tight handle. It's kind of hard to see in the weekly, but this was a good breakout candle here. We were bullish that. And then when you got above the cycle here on 10,000 at this pivot, and again, this was in line with the 13-month cycle, 13-month count. So now it was off to the races. So this is weekly again. We're basically, since we had really 8 weeks up, 8 bullish positive weeks, 1 week down, 1 week up, 1 week down. This is very indicative to have 1, 2, 3 bar reactionary moves when you have a lot of momentum. So 2 to 3 bar candle pullback, right back up. So we're basically in 1, 2, 3, 4, 5, 5th week on this count. If you want to talk about the weekly count from the breakout, we were 13 weeks up. So kind of interesting, 13 weeks up into the 50,000 figure. Something to think about. We've just been mostly taking profits. And then lastly, we'll just look at the daily cyclical count. I didn't go back to what we were doing prior in the cash charts, but this is good. So you had the breakout here through 20, 8 count into a gap up high, probably after Sunday. And the market traded high on the weekend, and futures opened up on a Monday. Boom, 8 candles right into a new high. Digestion period, made the low after the next 8.6 cycle. All right, and then 2 cycles up. Now we're 8-9 days, guys, coming into trading day tomorrow. So these are cyclical tops that you want to be taking profit, right? You don't chase and put new money to work 8-9 bars, 8-9 counts up. What else? I guess if you want to look, maybe just since I have the futures up, I had, yeah. All right, so we've been pretty busy intraday this year. We've been accumulating, but really now that the market's just full of momentum and the space is hot, we've been very active intraday. So I like to trade pairs trades, meaning when I was trading the desk and treasury market, we'd trade the yield curve. So I might be short 5s, long 10s, short 2s, long 30s, but you pair off your trades, or sometimes it's called relative value. The crypto market, there's not really a good short or a good hedge. But one of the things you can do, which is nice about futures, is you can be long the different months contracts. So I could be long February or March and short April. And I do a lot of that to hedge the intermediate term pullbacks and make a little bit of money and have some optionality whether the market goes up or down. I'm kind of long and short. So I'm playing net long throughout this whole move because we're bullish and the market's in a raring bull market. But how else are you going to play crypto on the short side? Are you going to short Bitcoin Cash against your long BTC position? I'll show you guys some other charts in a second. I was looking around. Maybe there's a few alts that you don't like, or maybe they don't participate as much. I was looking at Dash versus BTC today. But the point is that you can make some money on the short side by playing different time frames versus a core long position. So sometimes I've been long 3 futures contracts and short 2. Sometimes I've been long 4 and only short 1. You get heavier, and this is my add and reduce approach. So there's times here where we're adding to the position, taking some off, buying the pullbacks, taking some off, buying the pullback, taking some off, buying the pullback, taking some off, all while working a core long position, just meaning that we don't let the market take us out when in the uptrends. We do let the market take us out. So we're going to stay core long. You never sell everything. You'll lose your position. It's one of the worst feelings in a bull market. But you also don't need to just hodl. You can trade around your core position. So it allows you to get heavier, take some off, buy some back, take some off, buy some back. But my last few actions have all been taking profits in front of 50. If we get through 50, you close the day through there, you close the week through there, then I'll probably put some more on the right 5-minute, 15-minute move. But until we get through there, I'm down to my last few lots and on some of the cash position, meaning the actual coin, taking a lot of profits, trailing out at the moment. Let's see what happens at 50. If we can't punch through and we get another setback, I mean, there was people that were chasing above 40,000 and then they're nervous down at 30. So happy to buy back in the low 40s, which would be near the bands. You got our pie lines all the way back at 30,000. That seems like a mile away. But that's how we're playing it. So we're in and out on a lot of this stuff in our crypto room, pretty active. So we fired up this Telegram not that long ago in October. BTC futures were down 11,000. So if you snoozed on this, you haven't found us, or you just haven't pulled the trigger on the crypto room. I mean, we had Link down at $10. There's just a lot of trades in here. It's been a good run. Don't think it's over at all, but you want to be able to manage your risk along the way. You want to work on your longer term positioning, how you construct your portfolio. Here's what I was talking about, some of the pairs trade. I think this was like Litecoin versus Link. So we have some real-time alerts in here. I do a lot of cyclical work. Link was really in focus there for a while. Back to some futures. Binance, gosh, what was the chart on this? That's versus BTC. All over that. Just had a monster run. So anyway, if you guys have been long crypto, I mean, everybody's basically participating now. But there's still a lot to do. So a lot of risk to manage. But this is just a feel for how you institutionally trade around the futures. So there's BTC up 26,000. Just long one futures contract, having big days, $20,000 a day. Doing a lot of pairs analysis, Ether versus BTC, what was leading versus Litecoin. A lot of signals in here. So here's me long a couple. See, long one, short one, basically neutral at that point. You get a pullback. You can see a short a couple that are out of the money, but I'm at long over here on the other side. And it's just the same back and forth, but it's been a great start to the year. Here's being short, guys, and then taking profits on the pullback. It allows you to get longer on the lows. Instead of, if you just hodl, you just stuck waiting and hoping. It's not a risk management process. So all our signals later, I mean, putting up big numbers. All right. Just huge moves. So anyway, guys, that's our crypto room. If you're interested in that, go to jenkinscm.com before I get into the other global macro. Oh, we can hit on just a couple things on the pairs trade and alts first, but Jenkins CM for Jenkins Capital Management, jenkinscm.com. Come here to the cycle edge. And this is my total trading package that I've dropped down to just amazing price. This institutional body, this work we put together over 5 to 7 years, all institutional. We covered all the big banks, big hedge funds, Balyasny, More Capital. Again, I covered all the rates guys of all the primary dealers, and this is just all the directional stuff I put it into a model, and the courses for independent traders, my Pi cycle work. But there's huge value here, guys. I applied it to the options program. I threw that in as a bonus. You want to be on the options team. So you get the courses and the options team. It's almost $8,000 in value. And I was running a deal last week. So $749. Probably run this through the week and then probably gonna just bump it back up to like $1,000, $1,500. So that's still there for you guys. I'm no longer have the bonuses with the prop program and the coaching. It's just too much time for that price. If you guys want to learn the model, there you go. That's just phenomenal deal. Now if you come back, this is the crypto edge. I have a product where we trade volatility. I've got the options room below that too listed. But this is our crypto service. All right, I kind of hit on the daily chart, BTC. I don't really want to be short Ethereum, but I do like to keep an eye on what's sticking its head up. Is Litecoin outperforming Ethereum? Is Ethereum hot and BTC's hot, but it's not quite as extended. Ethereum looks pretty rich up here relative to the overall market. So just had a phenomenal move. I know they listed futures last week, Ethereum futures. Last time that happened with Bitcoin, they had a major top. BTC futures came out on the highs. For those of you guys that followed when the CME put that out. So it doesn't mean you need to be selling and going to cash. It's just an obvious place to be taking profits on Ethereum. And what I was going to say is, like, when you go to the smaller time frames, like the 30-minute chart, this is a perfect example of the spread. So you can, again, I don't necessarily want to be short. I'm in core long Ethereum. I've been for years and years and years. But I'm just saying, if, like, let's say this was Bitcoin Cash, maybe you don't like Bitcoin Cash. I think that's a great pairs trade. Short Bitcoin Cash, long Bitcoin. And then when you have the down moves, the deeper intermediate term pullbacks, you make a little bit of money on your short, feed that back into your Bitcoin longs. But say whatever chart this is, you can see that, I mean, this is a spot where you'd want to be a seller, right? Here you have Bitcoin is outperforming, which is fine. Here you have a pretty wide spread, right? It's obvious. Look at the distance on this spread here, right? So that can just be a great time to get out of your Ethereum longs up here, maybe adding that to BTC, right? Or just going to a little bit of cash, you get the deeper pullbacks, so you add your Bitcoin position. If I was playing it short, maybe you can play short here too, and then when you spread gets tight, you could just, anyway, this is how you trade pairs trades. There's other ways to chart it. There's other ways to analyze it. I guess I just wanted to point that out. And then, oh, this is what I was saying on Dash. So Dash was really quiet. I was looking at all the different a lot of the different alts that we followed for a long, long time, and Dash was just one that was like almost in a downtrend relative to all these big moves we've had. And that was sticking out to me a week ago, and now that market totally just caught up. So it's sticking out to me. I'm not saying it's a great coin to short. There's really directionally everything is bullish for the most part in this space. But if you guys identify projects you think are worthless or some coins that are just garbage, I would say short that stuff relative to the pairs trades that you're long. So that's the 4-hour Dash versus ETC. You clearly see it sticking out. If I'm long Dash, you need to be a seller taking profits into this move. Okay, it's kind of a long video. I'll just hit global macro. The dollar's been bearish. It's been a big theme this whole last 12, 18 months. That's great, which is a positive for Bitcoin. I don't think you're going to see a real down move or any type. I mean, there's just so much risk appetite right now from stocks to crypto. And what changes that is you're going to have the growth, the growth story slow down. Don't really see that on the horizon. Maybe this summer, maybe the market fronts runs it a little bit. But if you have growth slowing, which makes sense coming into the back half of the year because we're going to have to compare it to all the numbers we had when we bounced off the lows of the COVID lows. So it's going to be a difficult comp period alone. But the point is until you get the dollar to start to rally, which is a risk off signal, until you get treasuries to firm up, which they've been bearish, you're going to still be in this risk on environment. So I talked about 120 on the euro mattered. Our weekly cycle was low a week and a half ago. We held this 120 area. Now we're stuck in between the intermediate term highs here and resistance at 122. You get above there, that opens the door for move back to new highs, but definitely a retest probably at 123. And now we have a clear pivot on the downside. So yeah, 120, the low is closer to 119.5. If we take that out, then the model says there's room for a deeper pullback. The 200's in play or for full pi cycle back to 115, 116. That would be, that type of dollar rally could be headwind for Bitcoin. It should be for the metals, and it could be a bigger picture global macro risk off signal, which we would see where we're at in stocks, etc. But the VIX is low. We get a 1 to 2 day pullback, stocks make new highs. So I don't care about 1 to 2 day spikes in the VIX. I need to see trending moves. I need to see traction at new highs. I need to see weekly closes above new highs. So we've been actually playing the short side of volatility for the most part. Again, we trade this in a pairs trade fashion, long and short. But if you've been short futures, this is a spot to cover. If you've been short UVXY, you've had puts. All opportunities to take profit short volatility last week. Still bullish stocks. They're a little bit extended, but overall, I mean, still very bullish on the NASDAQ. I have got a little bit of a core short on the Russell, but I don't touch that. I just keep banging away on the long side of NASDAQ. Gosh, what else? Stocks. Oh, bonds. Bonds have been really, it's been a great trade. So I've been core short 30s, been bearish treasuries for this entire flip when we started to just basically the trend changed right in here. Couldn't hold the 200. The bands were all down. It's just been sell rallies in the long end, and it just looks absolutely horrible. So curve continues to steepen. It's a bear steepener. Yeah, I'm long a few tens, but again, this is like, you just want to keep selling rallies in the long end. You could even be short ultras, which is, we've had some great calls there also. So that's another risk off or risk on signal. Treasury market yields are going higher. I didn't even talk about the inflation picture. Oil, this is the risk on reflation trade. Yeah, maybe we go back to the highs of the year, which is crazy. But I actually think oil is going to be the first market to roll over if we do see growth slow into the back half of the year. So doesn't mean we can't continue higher and go sideways into the summer. But I am a little bit more interested on the short side of crude, contrarian core short between here and 65. You just got to be really patient if you want to play a big picture short or use the option. I've covered that in several videos. This one's long enough. This is a long-term weekly trend line that we kind of got through. But oil is usually the first to roll over global macro, and we've had these risk-off growth slowing periods. So anyway, still probably a little bit early on that. Something I'm thinking about the several months from now. Maybe as a bigger trade for the back half of the year. Hope that helps, guys. Sign up. Crypto room's hot. Join the membership there. And if you guys want to take advantage of that crazy discount on the courses, have at it. And see some of you in the morning.